Gold and silver continue to bounce around, up and down in a very volatile way. The response that I've gotten in my community where I actually live, people know me as a silver guy in my community for obvious reasons. They say to me, well, last time silver crashed like this, it took 30 years or whatever, well, 31 years for it to recover from 1980 to 2011, obviously. Now it took from 2011 to now, what is it? 15 years? This is not the 2011 market. This is not the 1980 market. This is not 1968. It's not 1919. This is the end of the fiat monetary era, where credit will disappear for a while, and all the purchasing power that now is imagined to be in credit actually goes into gold and silver. And the end game ratio will be somewhere around 15 to 1, could be 20, could be 10. Bitcoin has broken a 10-year uptrend line priced in gold, meaning priced in money. The value of Bitcoin has been going up and down and up and down in wild and crazy ways since 2008 when it was founded. And since about 2017, it has been going gently higher, even at its lows, in gold terms. So Bitcoin's purchasing power has been increasing steadily despite the volatility, but it looks like now that trend line has been cut, has been broken to the downside, and I do not believe that it will ever recover again. I focus a lot on the triple top here from 2021 at around 37.5 ounces of gold. Hit once here, hit once here, hit 3 times here, and it was marginally broken over here in December 2024. That's true at about a 42 ounce top. But triple tops that are only marginally broken to the upside, it's called a triple top reversal, and it is very bearish, and that's what I said back then, and that's what I'm saying now. So this trend line has been broken to the downside. It's going to bounce probably a little bit here as the trend line is tagged, and you'll have technical traders that are going to trade this trend line and try to pick a bottom here, but it's not going to be a significant bounce, I don't think. And we're going to head much lower and eventually to 0 ounces of gold when the dollar finally dies. And that will be upon the next printing round. I think that's when Bitcoin enthusiasts are going to start really getting shocked and scared that once the Fed cuts to 0 and we start the next printing round, all of the purchasing power, not all of it, but most of it will go into gold and silver and very little into Bitcoin, and the Bitcoin to gold ratio will plummet. Anyway, if you had bought gold, even without the yield of having a renter, having a tenant, right? Gold is only just storage money and insurance money, which is much less than the upkeep of a house and all of the headaches you have trying to keep your tenants happy and keep your house rented. So gold is a much better divestment than real estate is an investment, and that is proven here very clearly.
Are you curious about investing in gold and silver, but feel held back by fear or confusion? This ebook is designed especially for new investors who want clarity, not complexity. It breaks down gold and silver trading strategies in a simple, practical way. No jargon, no hype. Why wait? Hurry up. Please visit this link to get your copy today and use code MRJGZBYA for a huge discount. More than 1,000 people took the first step with this ebook, and today they're living proof that smart investing changes lives. Now, this book is also available in Amazon Kindle. Go and hurry up. Gold open interest is now sitting near a 20-year low, and this is the main reason I keep saying this is not the kind of market we saw in 2011. And it's definitely not like 1980 either. This is a minimally speculative market. Something much more fundamental is happening beneath the surface in both gold and silver, and the positioning data is the proof. Right now, gold futures open interest is around 400,000 contracts. We haven't seen levels like this since the 2015 bear market bottom. You could argue it dipped briefly below this area in early 2016, but either way, this zone represents classic bear market bottom conditions in terms of participation. That's extreme. What's interesting is that since 2015, the only times we've returned to this open interest range were during moments that lined up with major turning points. early 2016, early 2017, and again in late 2018 to early 2019, right before the big breakout move began and gold finally broke out of its long multi-year trading range in 2019. Every one of those periods marked a major low. And here's the key point. Gold prices today are nowhere near those old lows, yet open interest has collapsed back to the same bottom-level participation. That strongly suggests we're near a bottom again, if not perfectly in price, then at least in time. In other words, gold might still need a few more weeks to stabilize, but the setup suggests the uptrend is preparing to restart. Open interest simply doesn't have much room left to fall from here. Now, if we shift to the Bitcoin to silver ratio, it has already broken its long-term trend line decisively. It's not coming back above it in any meaningful way. There might be a small bounce, but structurally, the trend has been broken. And that matters because it signals silver is beginning to outperform relative to Bitcoin. At the same time, SLV, the silver ETF, just recorded one of the biggest single-day silver inflows ever. In fact, it was the second largest influx on record. The only time SLV saw a larger daily inflow was during the February 2021 Silver Squeeze event. But here's the important context. Back in 2011, when silver topped near $50, SLV holdings were at an all-time high. That meant speculative retail demand for silver ETFs was massive. Today, even with this large inflow, SLV is still nowhere near an all-time high. Overall interest in SLV hasn't grown dramatically since the 2020 lockdown period. So what does that mean? It suggests this recent inflow wasn't the start of a huge public mania. It was more likely bargain hunters stepping in for a quick trade after the silver crash. Despite higher prices, broad public interest in silver still appears low. And that matters, because silver tends to move in stages. The public doesn't rush in early. It usually takes much higher prices before the average investor starts panicking. But when that moment arrives, the public won't panic into Bitcoin. They'll panic into silver. Finally, look at gold relative to the stock market. The last time the gold to S&P 500 ratio approached this level from below, meaning gold was strengthening versus stocks, it was around the resistance zone where the early tremors of the 2008 financial crisis began. Do like, share, comment, and subscribe to this channel. Also, don't forget to hit the bell icon for more updates.